Welcome back to Coincheck. I'm Abhishek and you're watching thesis TV. So we've got a fresh launch alert. Syndicate Protocol just launched a token SYND by a community-first Aerodrome Finance listing. And the market has been violently price discovering ever since. We've seen massive vote power, AERO emissions, Coinbase DEX flows, and a flash liquidity vacuum created a huge intraday reach. Today we break down what that means for traders, what Onchain receives to watch, and a clean trade plan. So let's get into it quickly. So if we look at the price, it's at around $0.94, but it's highly volatile, so it keeps changing quite frequently. The market cap on CoinGecko at the current price sits at around $452 million. And obviously we've seen an adjusted free float node. So community contributors estimate effective circulating free float of 130 million tokens until the emissions start, token emissions. So it implies an effective circulating market cap near $120 to $140 million at current price. So many user interfaces, DEX Screener, CoinGecko and other interfaces are overstating this, circulating supply as well. The fully diluted value is almost double of that, so it sits at $943 million. So the circulating supply of tokens that is reported sits at 478.7 million tokens, as in a total supply of 1,000 million tokens. In the last 24 hours, we've seen $63 million worth of trading volume, and the 24-hour price range ranges from $0.6 to $2.61. So that's a lot of volatility that we've seen. On-chain queues you should be looking at should be Aerodrome vote spikes, heavy Aerodrome prime emissions to the liquidity pool for SYND/WETH, Coinbase DEX activity, and large wallet transfers for the token. What is Syndicate Protocol exactly? So Syndicate is a DAO infrastructure for building sovereign EVM compatible app chains, common chains plus custom rollups. SYND is used as a gas token. It is also used for staking, for sequencer, validator security, and governance. Product highlights for Syndicate would be one-click DAO creation, smart sequencers, cross-chain coordination, and Wyoming DUNA legal wrappers. The stack targets communities, DAOs, and tokenized projects that want sovereign chains with unified payment. So what's the narrative and on-chain fundamentals for SYND? So why should traders be looking at it? So number one, we've seen community first launch that worked at scale. So SYND seeded liquidity on Aerodrome and captured huge VAERO voting. So VAERO is locked AERO tokens. We've seen 166 billion votes out of 215 million voting power, making the SYND/WETH pool Aerodrome's primary sink and giving LPs immediate emissions yield. Number two, we've seen rapid retail plus institutional deals. The Aerodrome listing quickly showed up on Coinbase's DEX. That dual flow amplified both retail activity and exchange routing, producing big order flow. Number three, we've seen very good backing. So we've seen $21.8 million strategic backing from Coinbase Ventures, A16Z, Circle, Electric Capital, institutional credibility plus DUNA regulatory framing. Next, we've seen volatility drivers. Early liquidity drive was shallow at highs. Bots and fragmented order books produced flash wicks. It went up to $35 at a point during launch. So trade extreme spikes as likely artifacts unless confirmed by multisig proof receipts. So let's come to a technical analysis. What are traders and analysts on Twitter or X talking about, and what should you be looking at? So technical dip buy zone should be between $0.7 to $0.95, and if it goes below that, you could do aggressive buying. It's a high risk, so make sure the sizing of position is quite small, between $0.7 to $0.75, $0.6 to $0.75. You could also enter now, but the main thing is to dollar cost average as it goes lower, because it's got very good backing. The market cap is quite high, but it depends once we get more clarity as to what the market cap, FTV, and everything sets up. A stop loss at 0.28, as you can see on the chart, would be valid. We've got three targets. Number one, we've got $1.5. That's the first reclaimed liquidity shelf. Target 2 is near all-time high, so that's around $2.5. And target 3 is a very long-term picture. That's not from a trader perspective, more of an investor perspective. That sits at $6. So what are the risks for the token? Number one, we've seen extreme price volatility and liquidity vacuums at token generation event. Number two, circulating supply confusion. So many dashboards reported inflated circulating supply early, effective free float may be much smaller. Number three, we've seen VC treasury allocations and future unlocks would create supply pressure later. Number four, we've seen execution adoption risk. So the fully dilutive value prices and heavy adoption. If app chain usage falters, the rating stalls. There's obviously a narrative risk, social sentiment and on-chain receipts can turn quickly. Watch multisig and vote behavior as well. So what's the verdict? What's the final take about this token? Syndicate's Aerodrome launch proved community first distribution can scale. Huge AERO votes, AERO emissions, and fast DX integrations created real market activity. But the first hours exposed fragile liquidity and extreme risks. For traders, there's a clear dip by range and defined targets. But this is a high volatility, high risk launch momentum. Use small sizing and strict stops. For long-term investors. Wait for steady common chain usage and clearer circulating supply receipts before committing large capital. So that's it for today's Coincheck. Thank you for watching T.O TV. Subscribe to our YouTube channel to be updated with the latest news and developments happening in the Web3 space. I'll see you guys again on Monday. Happy weekend and goodbye for now.